Hello and welcome. You've tuned into Market Fatafat. I'm Ankita Saxena and with me is Ashesha Advaryu and you've joined us from the Suzlon studio.
And yes, this is a show where we discuss all the stocks that are buzzing in trade. On the technical side, we are now joined by Osho Krishnan of Angel One. Osho, afternoon. Thank you so much for taking your time out and joining us here on ET. Now, let's get started. And the first stock that we have on our radar this afternoon is clearly Trent, the biggest loser on the Nifty 50 index. And look at the kind of fall that we've seen for this counter after the company reported its first quarter results or operational updates. That stock is down 12.5%. Standalone revenue from operations has risen by 18.5%, but it is weaker than street expectations of about 22 to 23%. Goldman Sachs, meanwhile, has come out with a report. They're maintaining their neutral stance with a target price of 2886. They say first quarter updates were in line with what GS was estimating, but lower as compared to street expectations. Morgan Stanley has maintained its overweight stance. 3151 is the target price. They say we could see some weakness in the near term given the slightly weaker print that the company has reported. But the street clearly is not happy with the kind of updates that the company has shared for the first quarter of FY27. And that is the reason the stock is down more than 12% as we speak.
All right, that's Trent down almost 12% in the trading session. But let's talk about Bharti Airtel. Osho, you've picked out Bharti Airtel for us. Tell us on the charts, what are the levels that you're tracking for Bharti Airtel?
Very good afternoon to both of you. Firstly, thank you for having me on the show. Well, yes, no doubt Bharti Airtel is looking very positive. In the last few couple of sessions, the counter has seen a very strong momentum from the zone of nearly 1860 towards 1940, 50 odd levels. So overall, the technical perspective is turning bullish. The counter has emerged above the 20-day exponential moving average, 200-day exponential moving average, and overall the technical structure looks quite positive from here onwards. So I'm expecting that if it sustains on the higher levels of around 1940, 45, then from there onwards we can see a decent movement. First target will be of 2000 followed by 2040 for short-term perspective. But even if some profit booking can be seen in the counter because we have already seen 4 days of a strong rally in this stock. But again, any dip towards the zone of 1890 to 1900 should be seen as buying opportunity and one should try to accumulate the counter at current.
All right, let's move on to the next counter that is in focus. Titan, that is the top Nifty gainer for the day, trading with gains of more than 2.5% on the back of strong business updates coming in for quarter one of FY27. And it's mainly driven by the jewelry business. The overall growth was up almost 46% on a year-on-year basis. Very strong growth coming in versus an estimate of 28%. Now, that was driven by healthy festive and Akshaya Tritiya aided demand, and that's therefore the jewelry business beat the street expectations. As far as the watches business is concerned, the overall growth stood at 23% on a year-on-year basis. That also beat the street estimates of 12%. Now, that was led by the analog segment, and that was up, in the high 20s on a year-on-year basis. The eye care business, also the overall growth stood at 23% on a year-on-year basis. That was also a beat on the street expectations of a 9%. Also, as far as the international business is concerned, even there, the demand was very strong, including the Damas business, and that was up 128% on a year-on-year basis. The overall growth in quarter one remains at 41% on a year-on-year basis, and the total store count is at 3,680 stores. Strong set coming in for Titan, and on account of that, that's the top Nifty gainer.
Okay, so that's Titan for you, but let's also talk about RITES because that stock is soaring in trade today on the back of an order win. The company said that they've received acceptance of offer for an international order worth about $35.8 million, which translates to 342 crore Indian rupees. This is for supply and commissioning of 4,000 HP cap diesel electric locomotives, and the company has said that the order book has shown an upward swing over the last 7 to 8 quarters with a substantial increase, especially in the last 18 months. While the management will aspire for all-time high revenue, profits will not be able to break the all-time high records. It may take minimum 2 or 3 years to actually surpass the prior profit breaks, given that margin dilution from competitive mix continues to remain at play. But for now, it's a big order win that has come in for the company, and that is the reason the stock is up more than 12% in trade today.
All right, let's move on then. Osho, if we get Coromandel for us, this one's seeing momentum in the last few weeks, 17% of an uptick coming in before a considerable correction, or, the stock hasn't done much in the last 1 year. Last few weeks has seen some good moves. Do you see this momentum to continue?
Definitely, the counter have seen decent movement in last couple of trading weeks, and the counter has even emerged above the short and medium term moving averages. Plus, there has been various technical developments like positive crossovers within the exponential moving average. So overall, there are positive takeaways for the technical perspective in the counter. So I'm expecting that with the kind of momentum and positive cues, I'm expecting the counter can see some kind of strong traction in the coming period. So 2150 is the first target that I'm expecting in the short term period. And once it breaches the zone of 2150, then from there onwards, we can see decisive uptrend in this counter. So one should definitely keep this counter in the watch list. Any breakthrough above 2150 can provide very strong breakout in the system.
All right, let's move on then to Kalyan Jewelers, that is also in focus. Kalyan Jewelers has reported a weak set of quarter one that's coming in as far as the business updates are concerned, with a consolidated revenue that's risen 38% on a year-on-year basis, missing the street estimates of a 50%. Now, the same store sales growth was of around 28%, and the addition of 17 new stores too fell short of what the street was penciling in, while the strong growth in the Middle East and the Candere business offered some support to the business. But since Kalyan Jewelers missed out on the quarter one updates from what the street was penciling in, that stock is down and out 6.5%.
Okay, so that's Kalyan Jewelers for you. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, and this is a show where we discuss all the stocks that are buzzing in trade, either on the back of technicals or on the back of fundamentals. And we've already discussed a whole host of stocks before we went on this very short break. But let's get going with some other stocks then. And shifting focus to Info Edge then, the stock is soaring in trade on the back of very strong operational data that the company has reported for the first quarter of FY27. Standalone billings grew by about 14.4% versus Trent firm's expectations, which were in the range of 10 to 11%. In fact, not just billings, even across other parameters, the company has reported a big beat versus expectations, and that is the reason the stock has shot up 12.5% in trade today.
All right, let's move on then to the next one that Osho has picked out for us. Osho has picked out IndusInd Bank for us on the charts. 2.5% of an uptick coming in. In fact, in the last 5 days, Osho, very strong moves coming in on IndusInd Bank. 12% of an uptick coming in. Do you see this momentum to persist, and what are the levels that you're watching out for?
See, overall, there has been a very strong shift in the support base for the counter, because 960 previously was a very strong resistance for the counter. But in the past 3 trading sessions, there has been a breakout, and we have witnessed 2 days of follow-up buying. So the base is now shifted towards 960 to 980 at support levels, while on the higher end, 1080 to 1100 is the next potential target. So overall, buy on dip should be the approach in this counter. But now the support is at 960, and on the higher end, approximately 1100 is the target that one can expect in the short term.
Let's move on then to the next one that's in focus, and that is Cochin Shipyard, that is in focus and is under pressure. After the government has launched the OFS, or the offer for sale to divest up to a 5% stake in the company. The OFS has the floor price of 1,400 rupees per share, a discount of over 7% to the previous closing price, with bidding opening today for institutional investors, and tomorrow it will be opening for the retail investors. And on the back of the OFS, Cochin Shipyard is reeling under pressure with cuts of 3%.
Okay, so that's Cochin Shipyard for you, but let's also put the spotlight on oil marketing companies, and they continue to remain in focus after the news that came overnight that Saudi Aramco has cut August crude oil prices by about $11 per barrel. Now, the state producer slashed Arab light oil prices to a $1.5 per barrel discount over the regional benchmark, and this is a rare discount that the company has only offered for the third time in the last 10 years. Saudi Arabia has also signaled that it looks to aggressively push and secure buyers at a time when OPEC Plus is looking to raise quotas starting next month yet again. Now this, remember, is a positive for the economy and for the oil marketing companies, especially for a country like India, which relies heavily on crude oil requirements. Fall in crude oil prices from players like Saudi Aramco is a positive. Other than that, lower crude oil prices also means cheaper sourcing and higher marketing margins for all these oil marketing companies, and that's the reason all of these stocks are trading with gains in trade today.
All right, let's move on. Osho, Glenmark Pharma on the charts. What are the levels that you're watching for?
Yesterday, we have seen a very strong breakout in the Glenmark charts, daily time frame chart. So overall, I'm expecting that in the coming period, there is a strong possibility of having a very strong revival towards the zone of 2400. So overall, there has been positive developments. The counter has taken support from the cluster of moving average and has witnessed a consolidation breakout. So overall, the technical setup looks quite robust at current levels, and one may look for accumulation in this counter. 2400 is the first target that I'm expecting from short-term point of view.
All right, let's move on to Jubilant FoodWorks. That is also in focus after reporting an inline set for Q1 FY27 updates that are coming in. As far as their standalone business is concerned, that grew 9.2% on a year-on-year basis, while Domino's India delivered a like-for-like sales growth of 2.5%, with the company adding 58 new stores during the quarter. And if you look at the brokerage notes, Motilal Oswal has cut the target price. They're maintaining a neutral stance, but they've cut the target price to 475 from an earlier 500 rupees. The target price by Macquarie, they're maintaining the target price at 360 rupees. They're maintaining an underperform, and JP Morgan is also maintaining a neutral stance with an unchanged target price of 474, and Morgan Stanley also maintaining an equal weight, and they have also remained let their target price remain at 486. So that's the view coming in as far as Jubilant FoodWorks is concerned. The stock right now is in focus and up and away 3%.
Okay, so that's Jubilant FoodWorks for you. But Osho, you have also picked up HDFC Bank for us. The stock was gaining yesterday on the back of strong updates that we got over the weekend. The stock continues to gain today as well. On the charts, what is your view on HDFC Bank?
See, there has been a very strong positive crossover between 20 and 50-day exponential moving average with yesterday's breakout. So I'm expecting now the range is now shifted in HDFC Bank at higher levels. Now 810, 815 is supposed to act as a very strong support levels, while on the higher end, 870, 875 is the next potential target. So overall, the counter is looking quite bullish. There has been positive developments. So I'm expecting that from here onwards, the potential for upside is quite evident in the counter, and one may look for accumulation at current levels and even at dips of around 815. 870, 75 is the short-term target that I'm expecting in the counter.
All right, let's move on then. Osho, you've also picked out M&M for us. M&M is one name that hasn't really done much. In fact, it's been an underperformer. So do you see any reversal coming in on this name?
See, again, from the auto space, M&M, as you mentioned, has not done very positive or anything in the past few couple of months. But there has been very strong consolidation in the counter, and gradually the technical moving averages are now moving on the higher end towards the favorable outlook. So I'm expecting that in the coming period, there is a strong possibility for a strong movement in the stock. Approximately 3,400 is the first target that I'm expecting. It's not very aggressively looking at current levels on the daily time frame chart, but in the short term period, I'm expecting there will be a kind of a positive movement that can be seen in the counter. 3,400, which is the 200 simple moving average, that will be the first target that one can look as a target from short term point of view.
Okay, so that's the view coming in on M&M, but SRF, and the stock is trading at 2807. Do you expect the downside that we are seeing in the stock to continue, or do you expect the trend to reverse going forward?
See, overall, again, this counter has also emerged above the consolidation zone. The counter was into a very strong consolidation from the zone of nearly 2680 towards 2780 kind of a zone. But in the recent period, we have witnessed a consolidation breakout. On technical fronts, there has been multiple crossovers. There has been momentum indicators indicating positive development in the counter, and also the counter has emerged above the long-term moving average. So there has been positive development in the counter, and I'm expecting that in the coming period, the possibility of emerging higher is more in this stock. So one may look for accumulation. 2950, 2960 is the first potential target. If it breaches those levels, then again, it can see some kind of further upside movement. But as of now, 2750 is a very strong support zone, and 2950 is the target that one can expect in a short term.
All right, let's move on from SRF to TVS Motors. On the charts, how does TVS Motor look to you, Osho?
Well, TVS Motor has already given a very strong breakout. In the last four trading session, the counter has given a very strong momentum from the zone of nearly 3,500 and is now placed around the zone of 3,720. On the technical front, the counter has emerged above the long-term moving average. So overall, the technical setup is looking quite poised on the positive front. Overall, I'm expecting that this counter has very strong potential to reclaim the zone of 3,900. But as of now, there might be some kind of profit booking that can be seen, but any dip towards the zone of 3640, 3650 should be augured well for the buyers, and one may look for accumulation in the counter on the dips. 3900 is the short-term target that I'm expecting in this.
Okay, so 3,900 is the short-term target on TVS Motor. That's the word coming in. Osho, thank you for taking your time out and joining us here on ET Now and sharing your stock-specific ideas. But shifting focus then, foreign institutional investors turned net buyers in the second half of June, pumping in over 14,000 crore rupees into Indian equity markets. Financial services emerged as the biggest beneficiary, while consumer services, realty and healthcare also witnessed strong inflows. Mitali is now joining us with the latest trends that are shaping up.
The foreign institutional investors, they have made a strong comeback if you see in the second half of June, where they have invested on a net basis nearly 14,100 crore rupees in the Indian equity markets after selling a massive 51,500 crores in the first half of June. Now, despite this comeback, if you see on a net basis for 2026, they have actually remained net sellers in every month in the Indian markets. While if you talk about the DII's number, they have continued to support the Indian markets, remaining the consistent buyers for each and every month for 2026 till the month of June. Now, if you see based on the sectoral activity for the second half of June, that is from the 15th of June to till 30th June, the consumer-facing and domestic growth sectors, they are those sectors where they are attracting the foreign money. Consumer services in particular saw an inflow of nearly 3,000 odd crores, while construction, consumer durables and real estate, they also witnessed renewed FI buying. Healthcare also returned to the buying list, attracting nearly 1,435 odd crores in that second half after significant selling pressure seen in the first half of the month. However, the FI recovery, it was not broad-based. So if you see the foreign investors, they continue to sell the shares in metals and mining, oil and gas, power, automobile, as well as the capital goods. Metals and mining, they recorded the highest outflows, which contributed nearly 4,371 odd crores, following by power at 3,743 odd crores and oil and gas at nearly 2,800 crore rupees. Now, there was some relief seen for the IT sector, where the selling pressure, it moderated sharply. FI outflows declined to 733 crore rupees in the second half, compared with the massive outflow that we saw of 6,700 crores in the first half. The biggest shift which was seen in the month of June for the second half was in the financial services, where the FIs pumped nearly 14,634 crore rupees into the sector in the second half, reversing the net selling of 11,263 crore rupees in the first 15 days of June. So overall, this latest FI data, it shows a selective return of the foreign capital into the Indian equity markets, with investors showing a clear preference for financials and domestic consumptions. Sectors like consumer durables and also remain cautious based on the global uncertainties that prevail.
All right, with that, it's time to wrap up this edition of Market Fatafat. Ashish and I will take your leave from Suzlon Studio. Thank you so much for tuning in.